Stop trading every fair value gap. It will not work if you do not have structure. In the next 7 minutes, I'll explain exactly what kind of fair value gap you can use and why. Keep watching if you want to find out. If you're new here, this series is about trading like a professional, calm, structured, and in control. In the previous video, we talked about break of structure and changing character. Why I only use a 15-minute chart, and why and what fair value gaps actually is. Today we combined those pieces because this is where most traders don't get it right. When traders learn about fair value gaps, they start seeing them everywhere. Every imbalance looks like an opportunity. So they take a trade like this. Price moves fast up, a gap is formed, price comes back, they enter. But the problem is very simple. The market did never show you a direction. There was no shift. There was no confirmation. So what happened? The trader failed. The trade didn't work. Not because the fair value gap wasn't correctly, but because there was no context. My rule is very simple. I only trade fair value gaps after the break of structure, so a BOS. Why? My rule is very simple. I only trade fair value gaps after a break of structure. Why? Because the break of structure tells me that the market is moving again in the same direction. The structure is first formed and afterwards comes our entry. The break of structure is a confirmation that the market is continuing in a certain direction. The fair value gap is our execution. We use it for our entry. It's a step-by-step process, and I'll explain it very easily. I identify the direction on a higher time frame. So the market is moving towards liquidity. For myself, I use the 1 and the 4 hour for my directions because I use the 15 minutes. If you are using the 5 minutes and the 3 minute as an entry, you can also use your 1 hour and a 15 minute for direction. So what are we looking for? We are looking for, is the market making higher highs and higher lows, or is the market making lower highs and lower lows? This tells me a very important thing. The market is always drawn to liquidity, so we have to know where is it headed to. After that, we drop down to a 15-minute chart. Now we have patience. We have to be patient until we see the market continue in a certain direction. I'm not looking for an entry yet. We are looking for the structure of the market. We are specifically being patient, or we want to have a changing character or a BOS continuing in a certain direction. When the price breaks an internal high with a low or an internal low with displacement, that tells me that the market is continuing in a certain direction. What displacement means that the market has formed a huge candle in a certain direction and that it actually keeps continuing moving in that form. I'll show you in a second what displacement is. Step 3. After the break of structure has formed, we have patience. We need a fair value gap. The fair value gap becomes a potential entry area, not yet one. The market often returns there because the move happens very fast, and that is a displacement. And that is where I will enter calmly. We are not chasing the price. We are being patient until the market returns into that fair value gap, and then we have an entry. But letting price come back to me makes it easier for us to have an entry. We have a calm entry, and we can set limit orders so that we don't need to chase the market at all. Remember this rule, it's very important. A fair value gap alone is worth nothing if the market does not show you a direction with it. If the market did not show you a direction, that fair value gap is just a noise. Don't watch it. Don't use it as an entry. Will it work sometimes? Yes. And that will make yourself a not good habit. So don't use it. So always ask yourself one question. Did the market show me its hand already? Did it make a displacement or is it just hanging around? If the answer is no, we do not trade. Imagine that the market is trending upwards and making higher highs on a higher time frame. On the 15-minute chart, price breaks an internal high with a strong displacement. That's a break of structure. Now the market has shown direction. After that fair value gap, after that move, there should be a fair value gap formed, also in the 15 minutes. When price comes back into that gap, that is where I start looking for my entry. But if the fair value gap appears before a break of structure, I do not use it because the market has not yet confirmed that the direction is continuing in a certain way. This simple filter removes a lot of trades that you should not take. You stop trading every imbalance of fair value gap that you see. You have a clear process now that you can follow. And you have patience until the structure is shifting. The difference between a professional and a not professional trader is the professional has patience. The professional lets the market show its direction first and afterwards gets an execution. One more thing I do have to say is it does not always work. If it does not work, I do not enter. We have patience for the next day or the next shift. Let me give you a live example now. So I'll go over the market from yesterday because this was a sideways market for a long time. What did we see? We had an open candle and the market is shifting structure higher. 1 hour 2, we can see we had a shift in structure right here on this hourly. Here the shift started to happen. So we had a shift right here to the upside. The market continues to move. Now we should be looking for an entry. Where do we find a 15-minute fair value gap? We have one here after the shift, and then we are looking for an entry. What did the market do? It came back and it continues. Easy way to enter. So we did not chase the first move. We had patience. The market continued. So remember this rule. A BOS gives you direction. So a break of structure gives you the direction. A fair value gap gives you entry. Never the other way around. In the next episode, I'll show you premium and discount zones. So you only enter trades when the price is in a correct value area. That is another filter that keeps your trading calm and structured. If this helps you see the market more clearly, subscribe and continue watching the Level 1 series. Enjoy.